Hello everyone, welcome to the BISP Solutions. Today we will start with solving our first ticket related to TRCS, that is annual automation. So net operating losses not getting carry forward in the next year. So this is our first ticket. We will see how to do the configuration at the back end and how the losses will be carry forward in the next year. Before that, let us understand what is net operating loss. So it is net operating loss is what it is called when business allowable deductions exceed its gross income in a tax year. So calculating the net operating loss for a business is as simple as subtracting your tax deductions from the taxable income for the year. So net operating loss is a tax credit that occurs when business tax deductions exceed its taxable income in a year. Businesses can carry forward their losses to the future years to reduce or eliminate tax deductions. A business can carry forward its NOL indefinitely with some limitations. So how will be calculating the net operating loss? That means on a business expense sheet, the net operating loss is calculated by subtracting itemized deductions from the adjusted gross taxable income. If the result is a negative number, you have a net operating losses. So annual automation is used to configure rules so that you can automate the process of deferring current year tax losses and utilize those losses and expire the tax losses and credits, and you can carry forward them. So tax losses are incurred when the total of the taxable income in the current period is less than zero. When you do not have any income, you have the loss in that particular year, so tax losses will be occurred. It will be occurred in the current period and can be deferred so that they can be utilized in the future periods. When the total of taxable income in the current period results in a positive amount, tax losses which will be originating in the prior years can be utilized. Deferred losses, or the losses that will be originating in the prior periods or year, it can be utilized either fully or partially in the current period. So carry forward losses, it can be assigned a particular year of expiration and no expiration by default if nothing is entered. Tax losses or credit which will be expired in the current year, it can will be automatically written off. How you'll manage the annual automation rules? So annual automation screen, it will enable you to configure the rules defining how the system should automatically defer, utilize or expire the tax losses and book the corresponding offsets amount. The NOL automation rules are there in the system, and the following automation rules will apply. Um, it will automatically it can automatically expire deferred losses whose year of expiration has passed. If you have suppose written the year of expiration is 8, and it will automatically expire those losses whose year of expiration will be passed. You can access it from your configuration card. It will show the base level descendants of tax losses CFS total, that is consolidated financial statement total, and the tax credit total parent account, which has both the losses and credit accounts. The current provision automated column, it will display the result of annual automation rules for the base level accounts and the tax losses consolidated financial statement total. When a utilization flag is there, if you check that flag, then its dependent columns will be enabled, like utilization limit taxable income and utilization limit carry forward, percent and amount. So this is how you define the annual automation rules. So to define the annual automation rules, you have the administrator or the power user security rights. And how to define this rule? You need to go from home page to the application, select the configuration card, use the annual automation configuration card to define your automation rule. To add additional rules, you can click on the action menu and click add rule. The system will insert a new rule in which you can define the new rule. Select the target account from the pre-populated list of base level descendants of the tax losses, consolidated financial statement total account, and tax credit total account. You can select one or more calculation methods, that is, first is deferral, second is utilization, third is expiration. Enter the entities to which you want to apply the calculation, and you can enter the excluded entities to identify that these entities will be excluded for processing of annual automation rules. After you define this rule, you have to run the consolidation. Okay, let's see how this will work. So I've just given you the brief about annual automation. So first we'll go to the configuration card and define our rules. Select this annual automation card. So for FY20 P12, I'll tax losses carry forward. I'll defer it. I'll utilize this. I want to defer my tax losses. I want to utilize my tax losses. If you want to include the particular entity, you can do that. If you want to exclude some entities, you can even do that. Jurisdiction, deferral limit, already by default it is defined 100%. Utilization, by default it is defined 100%. Utilization limit carry forward, it is 100%, and priority will be set to 1. So we are assuming that we have a loss in our FY20 year and P12 period, and we want to defer that loss and utilize in the next year, that is FY21, and I'll select the period as P12. So we'll again define the same logics there as well, so that we can say okay, defer, we are defining the utilization priority as 1. We have defined right now the logics and rules in period P12 and year FY20. Now similarly, same procedure will be followed for FY21. Tax losses, defer and utilize. If still not, suppose in last year we have the tax losses of 50,000 and the next year we have the net income of 30, so still 20,000 losses will be remaining. So we want that loss again to be deferred to the next year, or if it is utilized completely, you can utilize in the same year. So 100% utilization and 100% deferral limit, where it is by default set. Priority you can give as 1. So on the back end, we have defined all the rules. Now we'll go to tax provision national and under package. Select the correct scenarios for your select the correct intersection for which you will be entering the data. So it is FY20 P12. We have defined the annual automation rules for this particular intersection, that is FY20 was my year, period is P12, scenario is actual. My entity I'm selecting is operations USD. Consolidation will be entity input. So basically when you'll take the base entity, base members, then only you'll be able to input the figures. Right now I do not have anything entered. I'll randomly input the figures. Jurisdiction will be US domicile. Multi-gap I've selected as local gap. Currency as entity currency. So I'll show the net income. I'll show my net loss here. 20 lakh is my loss. I'll save it. I'll make it simple. I'll take this example only. So my loss is 20 lakh. I do not have any permanent and temporary differences available here. It's up to you how you get the data accordingly, but ultimately you should have the loss. So you can see my taxable income here is 20 lakh. And you do not have any tax losses carry forward right now. So this is my taxable income or loss, you can say it. We want to carry forward this loss because we do not have any other subsidiary entity with which we can set off this loss. So we'll carry forward this loss to the next year. So we have to run first business rule. This is my entity. Period is P12. Year is FY20. So you can check, cross-check. Year is FY20, period P12, scenario is actual, entity is LE101, and click on launch. So you can see that this was our amount and it get adjusted. So taxable income remains 0 and we want to carry forward this loss. So it went to here, that is tax losses carry forward automated with the rules that we defined. Earlier there wasn't any number. After running this rule, it got its effect what we defined, that the configuration rules that we defined. Now we'll move to the next year, that is FY21. The next year you have the taxable income of this much, 31,754,675. That means you have a profit, and this much is your tax amount. So I want to utilize my previous year losses with this year profit. We have defined at the backend logics. Now we'll run the business rule to capture its effect. So first we'll run the rule for FY20P12. Then we'll run the rule for FY21P12. We'll wait till this rule is run successfully. It is taking some time. Let us check in the jobs if it is run or not, otherwise we'll run it again. Still not yet successful. You can see the job status still processing. So we have run the rule in the next year and the rule run was successful for FY21 P12. Now what we have seen is our taxable income for this particular year was, the automated income was 31,197,392, and there was some adjustment which was done of negative 1,442,717. So our net income, total taxable income was 29,754,675. So we wanted a last year losses to be carry forward to this year and get adjusted. So our last year losses was 20 lakh. So that loss gets carry forward in the next year, that is 20 lakh, and it gets adjusted with our net income. You can see our taxable income before loss was this much, 31,754,675. But as and we utilized 20 lakh loss which was there in our last year, completely we utilized with this taxable income before loss. So 31, so 3 crore 17 lakh 54,675, and we subtracted the tax losses of 20 lakhs. So our net taxable income will be 29,754. On this amount now we'll be paying the tax, and this is our current tax on this taxable income. So this is how you carry forward your losses from the last year to the next year. So earlier the main question is an annual tax losses. So our ticket was annual tax losses is not getting carry forward to the next year. So we have done at the back end the configuration, like we want to what percentage you want to utilize it, what percentage you want to defer it, and what is the priority, and for what period and year you want to do that. So we have first set for 20 P12, this was our loss. We said this loss taxable income needs to be carried forward to the next year, so it becomes zero in this year, and this loss gets carried forward to the FY21. And when we went to FY21 period, you can see total taxable losses carry forward is 20 lakh. Is it gets subtracted from your net taxable income which was before loss, and it helps you to reduce some of your taxable income so that you can pay less tax. That's why we always carry forward it to the next years. So that's all for today. So this was our first ticket. We'll connect in the next session. We'll connect again and we'll discuss about the next tickets. Thank you all for your time. Thank you so much.